How about just no tax? The tariffs work out like I think a thing like that could happen.
Do you think it's possible to find a way to eliminate federal taxes?
There is a way.
Can we reform taxes to eliminate the need to file?
There is a chance that the money from tariffs could be so great that it would replace.
What's up, you guys? It's Graham here, and I never thought this would happen, but you gotta hear me out. No more income taxes. That's right, Donald Trump wants to completely eliminate the federal income tax and abolish the IRS, going back to how we operated back in the 1890s when tariff revenue was the main source of income. And if that were to happen, you would owe nothing to the IRS. The April 15th tax filing deadline wouldn't even exist, and you would be able to keep 100% of what you make. So is this actually doable, or is it a horrible idea that'll completely destroy our economy? Well, given all the misinformation floating around on the internet, I thought that we should break down exactly what it'll take to replace income taxes with tariffs, whether or not this is even possible, and what it will realistically take to actually make this happen. Because the truth is, it's pretty surprising. Although before we start, I did a ton of research to put this video together and make it as unbiased as possible, so if you appreciate that, please do me a huge favor and hit the like button or subscribe if you haven't done that already. That's all I ask, and as a thank you for doing that, here's a picture of a lizard. So thanks so much, and also a big thank you to the Gemini credit card for sponsoring this video, but more on that later. Alright, now, in order to understand exactly how we could abolish the IRS, let's start here with tariffs. Now, I've said this before, but think of tariffs like an additional tax that's collected anytime you import goods from one country to another. The theory is that if imported goods become more expensive, it encourages people to buy it locally instead, thereby helping out their own economy. Or, if they don't buy locally made goods, at least the country gets to collect a little extra revenue in the process. And if that sounds confusing, let's take the example of a television. In this case, imagine that China manufactures and imports televisions to the United States for $100 each. Well, this competes with American-made TVs that cost $200. And as a result, American-made products are seen as more expensive and less competitive. So in an effort to level the playing field, a 100% tariff is placed on Chinese imports of televisions. And all of a sudden, both items now cost the exact same amount when sold in the US, thereby increasing revenues for the government, making American products slightly more appealing, and also making them slightly more competitive. Now, in terms of who pays the tariff, it's not paid by the other country, but instead by the person or company who imports that item to the United States. So in this case, if Google were to import televisions made in China and they bring it into the United States, Google is the company responsible for paying the additional tax, not the country who makes the item. Anyway, this is obviously a stupid example just to illustrate a point, but apply this thinking towards practically anything that you buy, from clothing to batteries to cars and electronics. And all of a sudden, that additional tax makes locally made goods that much better. But is that something that could actually replace the income tax? Well, surprisingly, the way we pay taxes is actually a relatively new concept. In fact, for the first 100 years, the US government funded itself almost entirely from tariff revenue on things like tobacco and alcohol. That's because back then, the government was relatively small, and when you only spent 3% of your total GDP, it doesn't take much to run the entire country. However, by the late 1800s, policymakers recognized that tariff revenue was a rather inconsistent income source, and it was either great or a bust during times of prosperity or a recession. So when the US entered its civil war, a temporary income tax was implemented to help raise a little bit of money. How much, you might be wondering? Well, back then, it was a 5% tax on incomes between $600 to $5,000, a 7.5% tax on incomes between $5,000 to $10,000, and a 10% tax on everything above that. However, in 1872, taxes were declared to be unconstitutional, so they were repealed. But that didn't last very long, and by World War I, taxes were back on the table as a way to finance the war. Except by this time, income taxes were deemed as a much more reliable and consistent way to raise money for the government that actually helped grow the economy. As a way of doing that, they reduced tariffs, which allowed Americans to spend more money. And with a lower cost of goods coming in from other countries, we really developed as a society. That, of course, continued throughout World War II when Congress created payroll, withholding, and quarterly tax payments to make sure they'd earn revenue as soon as possible. And over time, the income taxes that were meant to be just temporary eventually stuck. In this case, the more we paid into the system, the more the government grew. The more the government grew, the more reliant they became on that income. and the more we grew the national debt. Put simply, this is the amount of money the US government borrows and owes in interest to pay for its continual spending. And really since the late 1800s, we've run at a deficit almost every single year, meaning we spend and borrow way more money than we take in. Now normally, this isn't seen as that big of a deal when our spending's relatively in line with our gross domestic product. However, once you start borrowing an extra $1 to $5 trillion every single year, for decades, it begins to add up. We have about $1.5 trillion allocated towards Social Security, $1.5 trillion for health and Medicare, $850 billion in interest payments, $750 billion for the military, $500 billion for education, and pretty soon, before you know it, you've spent over $6 trillion while only bringing in $4.3 trillion. This means that we've just spent an extra $1.7 trillion that gets added to our national debt that's now projected to hit $53 trillion by 2035. So here's what I'm getting at. The government currently generates about $2.2 trillion from income taxes. So hypothetically, income taxes would be able to be eliminated entirely if the government could somehow spend $2.2 trillion less, make $2.2 trillion more from tariffs, or force a combination of the two. And in terms of the likelihood of this actually happening, here's what I found very surprising. Although before we go into that, in terms of what I'm personally doing about all of this, I'm just using it as a way to diversify. Like analysts have made the argument that Bitcoin serves as a hedge for instability, while others see it as an opportunity against a weakening dollar. That's why I've taken the approach to invest in as many different asset classes as I can. And using our sponsor, the Gemini credit card, has helped me do exactly that. For those unaware, they are the only instant crypto reward credit card that gives you Bitcoin back every time you purchase. For example, you could get up to 4% back on transportation, 3% back on dining, 2% on groceries, and 1% back on everything else, which is fantastic for a card with no annual fees. Plus, you're not just limited to Bitcoin. You could select from more than 50 different cryptocurrencies that you could switch to at any time. This makes it easy to gain a little exposure to the market without having to buy it myself or try to time things perfectly. Plus, like I said earlier, this World Elite MasterCard has no annual fees and it comes in 5 sleek stainless steel colors. Do you have black, silver, rose gold, Bitcoin orange, or the brand new XRP edition? You could also check the description for more information on rates and fees or see if you're eligible with no impact to your credit score. Even better than that, but so far, Bitcoin rewards earned and held for 1 year in the Gemini credit card have actually appreciated 176% on average. So if you'd like to earn Bitcoin or select from more than 50 different options that you could switch to at any time, sign up today at gemini.com/Graham or use the link down below in the description. Plus, as a special bonus, you could get $200 of free Bitcoin when you spend $3,000 in the first 90 days. Again, that link is down below. Thank you so much, and now let's get back to the video. Alright, so in terms of whether or not we could actually abolish the IRS and replace it entirely with tariffs, here's what it'll realistically take. As you can see here, in 2025, tariffs have so far raised almost $100 billion, which sounds fantastic until you realize that that only covers 5% of the entire deficit. Meaning we would have to increase tariff revenue by 20 times just to cover the amount of overspending in the government alone. Let that sink in. Basically, the entire year of tariffs is only going to generate enough money to pay for Social Security for 3 weeks. But fine, there's certainly the argument that tariffs will increase. This is just the very beginning. It could add up to a lot more money over time. Great. Well, here's what would have to happen in order for that to work. Let's start with removing all taxes. In this case, the government would need to replace about $4.4 trillion worth of revenue collected from the public, corporations, and employment taxes. So tariff revenue would have to jump by 44 times just to balance out. This means from a practicability standpoint, if we import $4 trillion worth of goods to the United States, those would have to double in price on everything just to break even. Like if this were to happen, you would wind up spending about $4,000 for an iPhone, $10 a gallon for gas, or a 100% increase in the cost to build a home. Like let's be real, if the price of every single import doubled overnight, we just wouldn't import anything anymore, and our revenue would decline substantially. As a result of that, our economy would likely crater, our dollar would plummet, and we would enter the worst depression imaginable because we've cut ourselves off from the rest of the world. Plus, most people would just spend more money on the cost of increased goods than they would have just spent in taxes to begin with, so it would defeat the entire purpose of saving money. We would also be the only country in the world to fund ourselves with 100% tariffs, so that would be quite the accomplishment. Of course, that's not to say that tariff revenue can't be increased over time, and one study made the argument that tariff revenue could theoretically be as high as $780 billion before having diminishing returns. But so far, no developed country uses tariff revenue of more than 2.7% to fund revenue, meaning, again, this would be unprecedented, and it would still fund less than 20% of the overall government budget. And this doesn't even account for the possibility of other countries starting a trade war or igniting a global fallout. But what if there was a way to reduce income taxes by just getting rid of personal income taxes? In this scenario, personal taxes make up about $2.2 trillion worth of revenue. So tariff revenue would have to increase by 22 times today's levels just to make this work. Again, just as a hypothetical, you would have to pay at least 55% more on every single imported item just to begin to make a difference. And that's assuming that people have the money to spend on this, which they don't. Inevitably, this would cause just as much of a global sell-off. The poor and middle class would bear and pay for the brunt of this, and we would still spend trillions of dollars that we just don't have. So how would this ever actually work? Well, the honest answer is it can't. It would be impossible to eliminate federal income taxes. The government just spends too much money, and tariff revenue is never going to be enough to be able to replace it. But hypothetically, if we could, here's exactly what it would take. First, the government would have to completely eliminate the deficit. This means if the United States makes $5 trillion, we have to find a way to spend $5 trillion. And at the rate we're currently going, that means that we need to cut $2 trillion just to break even. In order to do this, we'd have to probably cut Social Security and Medicare by half, saving us $1 trillion. We'd need to reduce the military budget by another 50%, saving us $400 billion. We'd probably need to default or refinance our interest payments, saving us another $400 billion. And then with 15% budget cuts across everything else, we could now get to a point where we make and spend the exact same amount. I guess if we just stop there, theoretically, we could eliminate all income taxes and be on the same trajectory by adding to the national debt. But also, that's probably not going to be enough. So second, we would have to reduce spending even more. At this point, if we could cut another $1 trillion from government spending, then we could only add 3% to the national debt every year over what we already owe and let inflation take care of it over time. To do this, we'd have to cut most social services, the Department of Education, reduce Social Security by another 25%, and cut the military budget down to what's absolutely necessary while refinancing all of the national debt. And then we could probably get rid of personal income taxes, as long as we also, 3, increase tariff revenue. Look, the truth is, we could only increase this so much before it has a negative impact on our economy. And even though we're on track to surpass $100 billion of tariff revenue, that's still just 2% of everything the government needs to run. This means, without a very long-winded answer here, replacing any meaningful amount of US revenue from tariffs is essentially zero. The US government would basically have to cut all spending by 50% while increasing tariffs 10 times where they are today to even begin to move the needle. So that's just not going to happen. I hate to be the bearer of bad news here. That's why I think, as fun as this is to imagine, it's just not feasible, no matter how you try to make it work. And the government today is not the same as it was 100 years ago. But that's also not to say that we can't cut down on a lot of wasteful spending. Like in 2015, the government issued $1.3 million to study how to keep beer cold in hot weather. $3 million went to research that studied hamster fighting when given anabolic steroids. In 2010, the Census Bureau paid $2.5 million for an ineffective Super Bowl commercial, or there's $100 million spent on unused plane tickets. And this one's absolutely absurd. $500,000 maintaining a self-cleaning toilet that hadn't been flushed since 2017. Here's another one, because we could keep going. The National Science Foundation paid $75,000 for researchers to capture 47 Anole lizards in the Turks and Caicos Islands and then blast the animals with leaf blowers. Or how about these ones? Since 2003, the government spent $2.7 trillion in payment errors. Congress provided $516 billion in appropriations in 2024 to programs that had expired under federal law. Nearly 2/3 of that belonged to provisions that had expired a decade ago, and 88% of federal office buildings are unoccupied. Basically, our best case scenario here is only to add a little bit to the national debt every single year that could be whittled away with inflation by cutting wasteful government spending as much as we possibly can. Will it happen though? Probably not. But hey, you know what? At least that answers the question that no, tariffs cannot replace income taxes, as great as that would be to happen.